Hi, everyone. I'm Ryan Lackey. I've been involved in crypto since the 1990s, back when it was like a gold-backed digital anonymous currency and all sorts of other crazy stuff like that. And unfortunately, I missed yesterday. I was in London with our insurance carriers working on some more capacity. But this has been amazing to see the growth of the industry over the past, decades. So hopefully, show the next step that's, I think, it is pending and is going to be very, very exciting. So pretty much everybody here knows a lot about Bitcoin mining. Bitcoin mining, incredibly well developed from where it was 15 years ago. Now there are large public companies doing Bitcoin mining. There are multiple hardware vendors, everything else. That's going really, really well. Unfortunately, everything that's good about Bitcoin mining is also something that's bad about Bitcoin mining. It's the most competitive industry pretty much in the world for anything. It's a perfectly competitive industry with anyone can enter. One Bitcoin's a Bitcoin anywhere around. People win or lose based on efficiency, and it is a very challenging industry to make a profit. So people have been trying this for a long time. As Bitcoin price goes up, as the difficulty goes down or it doesn't appreciate as fast, that's great, but it's still a very challenging market. However, the strongest battle has produced people that are incredibly good at large-scale power operations, large-scale adaptive power operations, data center operations around the world, all sorts of things like that. So people have risen to the challenge. AI, in comparison, is a much newer space from a hyperscale compute perspective. AI has been something since the 50s people have been talking about doing, but really the large-scale data center AI approach, most of the AI data centers that are under construction, there are more data centers under construction for AI than exist today, and it's growing very, very fast. So it's really the opposite end of the space compared to Bitcoin mining, where it's a completely new space that is hopefully going to grow, but has some slightly different characteristics. There's a lot of things that are the same between the two. They're both very large-scale, high power consumption data centers, which follow power costs, but there's a lot of other factors that are involved that have been a pretty big challenge. We're an insurance company. We insure Bitcoin mining hardware at about 40% of the world's Bitcoin mining hardware by hash rate around the world is insured by us. And we get to see a lot of these very large public mining companies. It's a very well developed space. There's a lot of standards, a lot of people building things there. AI facilities are a lot of the large public mining companies are now expanding into AI, and they're seeing a lot of the same things being applied. A lot of the same, recapitulating the same development that happened in the mining space, where things have happened. Because there are a lot of things that are different. Unlike Bitcoin mining, there's basically one vendor. AI compute is largely split into two categories. There's training and inference. On the training side, there's basically one vendor, basically NVIDIA. And that's in contrast to the Bitcoin mining space where you have multiple vendors. There's an incredible price differential between Bitcoin miners, where the Bitcoin miners have been on the marketplace for years, so you can buy used Bitcoin miners, put them into production profitably in some cases, versus AI compute, where there's really only two or three generations of AI compute hardware that are relevant to discussion for training, and they're all made by the same manufacturer, unfortunately. So there's that. And then there's the fact that AI equipment is probably an order of magnitude to 2 orders of magnitude more expensive than the equivalent Bitcoin mining hardware. You can easily have $2 to $5 million worth of hardware in the same footprint that you'd have $50,000 worth of Bitcoin miners or less. So that's turned into a major issue. So there's a whole bunch of problems that need to be solved in this space that are sort of pending to be solved. And from an insurance perspective, we focus on certain aspects of that. The biggest issue is because these values are so high, and because there's an inherent value in concentrating the assets in one place, there's really two factors. There's an operational, there's a financial. On the operational perspective, there's much more incentive to build really, really large-scale AI training centers. There's projects like Stargate, which is $500 billion worth of CapEx. And a lot of those individual facilities are going to be in the $20 to $30 billion of CapEx. That is a huge problem from an operations perspective, because you basically are building single locations. They're large campuses, but they're still relatively single locations with such an insane concentration of value that insurers are very uncomfortable insuring $30 billion worth of hardware for a single asset. They look at something called a probable maximal loss, where we want to make sure that if there is a fire, natural catastrophe, anything else, it doesn't affect more than a certain amount of value, because the whole way insurance works is by assessing risk across multiple risks and making sure that you don't have the same, you don't have one incident that takes out all your capacity. And if you have a $30 billion single asset, you're going to have potentially a very large loss. So that's been an issue. And there's also purely the power density issue. If you have a single cabinet that's drawing 100 kilowatts on the low end now, up from there, that becomes a cooling issue, becomes a concentration issue. As well, there's the unique aspects of AI data centers that are very different. Bitcoin miners have very nice characteristics from the perspective of from an operations perspective. Basically, it is power in, cooling, and then a very small amount of data coming in and out. In contrast, AI for training has the problem of using large amounts of data, using other ancillary systems. So these systems have to be highly mesh networked with something better than Ethernet, something like InfiniBand or some other protocol. So there's a much higher cost per unit deployed in the data center. So it's a little bit more challenging to segment out that data center, to upgrade it over time, things like that. As well, training is only half of the problem. And given how new AI is in the space, we don't really know where this is going. Like, anyone who tells you they know where AI is going to be in 5 years really doesn't know. So there is the training part of the data center, which is usually runs that are CapEx that's a couple of years, then moves on. So maybe a 5-year replacement cycle. We are relatively sure what that's going to look like for the next year or two because of the delivery schedules, but we don't know what inference demand is going to look like. We don't know the technology that's going to be used for inference. There's much more innovation happening on the inference side, and right now inference is maybe on par with training, but there's a very good chance that inference is going to be 100 times bigger than training in the long run. So we don't really know if the part of the operations that are dedicated to inference, how big they're going to be. So it's very hard to plan for a lot of operations if you don't know something by 2 orders of magnitude. So that's a huge challenge. And then additionally, there's some challenges with the. Oh, sorry, 1 second. There's some challenges with the security issues of AI and political issues of AI. Generally, no one is embargoing people from importing Bitcoin miners. The biggest geopolitical issue that's ever really happened with Bitcoin was the China ban of mining and people exporting a lot of miners to the US, which was one-time event, relatively straightforward. AI, on the other hand, is at the top of mind for basically every government in the world at all times, both on a training. People want to have a national champion AI company, from a use of citizens' data from a regulatory perspective, and there's the inherent fear that AI is going to replace jobs. So some people are afraid of that. Other people are afraid of losing sovereignty, everything else. So it's a much more geopolitically fraught issue than than Bitcoin mining. So for a nice change, Bitcoin miners is a very, very simple and politically favored thing. Even a couple of years ago was much more viewed politically favorable and very easy compared to AI. So there's a challenge there as well. And while both of these have some reasonable chances of being solved, there's a lot of things that we can do as an industry, as Bitcoin miners moving into the AI space, as people supporting the build out, everything else to make this an easier problem. So probably the first thing that makes the most sense is, as you're building facilities, design them as segmented as possible so that in the event of a loss, you do not lose a very large fraction of the asset. You've got a campus in places like Texas where land is relatively cheap. Using more land and relative to the amount of power you're using does give you a lot of advantages. In contrast to Bitcoin mining, AI makes sense in places where electricity is more expensive. So you're trading, you might be willing to take a higher power cost, but a lower risk of natural disaster or terrorism or other incidents. Because if you're putting $50 billion worth of AI compute in a location, the risk of damage to the property is higher than paying 1 cent a kilowatt hour extra for power. On the power side, AI generally is much more sensitive to getting power quickly, getting large amounts of power than they are to absolute price of power. So there's a lot of places where Bitcoin mining isn't quite as profitable because the power costs are higher, where AI does make sense. And the unique load characteristics of AI are that it's both a very large load and a very bursty load, and in general, both the training and inference cannot be curtailed. If you curtail these loads, you're losing very, very large amounts of money per second that you're down. Service level agreements are there. We're working on some products from an insurance perspective to try to address those risks, and it's an emerging and open problem that no one has solved yet, of how to properly underwrite service level agreements and business interruption, business continuity for AI risk. It's the thing that actually terrifies, of all the people, I've just been in London for a week talking to other insurers, the thing that terrifies them much more than having $30 billion of assets on a campus is any sort of BI/BC exposure for AI, because it's such a novel space that doesn't have a lot of history and potential downside. So there's that. One thing that has been very, very interesting to a lot of these Bitcoin miner, or to AI and Bitcoin, is that they actually go better together than they are separate. Because Bitcoin is an inherently flexible load, reactive to load, and some people are able to react in a sub-second load mitigation or load management perspective, that pairs very, very well with AI. So you have an AI load, the AI gets whatever power it needs at any given time, and any spare capacity gets used by Bitcoin. And then if the grid is asking for curtailment, what gets curtailed is generally the AI load, or generally the Bitcoin load. The other thing that's coming is a lot of these BESS systems are being deployed at AI facilities because of the cost of outages. You're much more concerned about having high availability, reliability, N+1 power feeds, on-site power. And if you're converting an existing Bitcoin mining facility, most Bitcoin mining facilities have a grid feed. They do not have redundant grid feeds, and they, unlike some of the large traditional data centers, and they also do not generally have power protection for power, because they would be crazy at the scale they're operating. However, AI does require this and is able to pay for it. So we're seeing incredibly large battery storage systems that serve two purposes. They keep availability, but they also allow power sources that are available with some potential for curtailment to actually serve an AI load. I think I saw a statistic where people are saying that if you can shed 1 hour every month, you increase the amount of capacity available by about 100 gigawatts across the US for this kind of load. And that is power that is desperately needed. So I was in London for the last week, in basically the center of the world for insurance. I think 40 to 60% of the excess insurance comes from there. And the main concerns that I've seen, which are definitely going to feed back into how builds work, because insurability is a major factor. We're seeing a lot on the AI side. AI has been driven by foundation model companies, traditional hyperscaler companies, some companies like Google, Microsoft, people like that. They have very large balance sheets. However, they don't have infinite balance sheets. So as the AI build-outs are happening, it's in the low trillions of dollars projected. they are unable to just continue keeping all that risk on balance sheet. So they're going to outside sources, which requires financing, which requires insurance. And you can't insure something if the insurance companies won't insure it. Like, it's basically required that you, yeah. So factors that increase the insurability of these risks are basically being able to segment risk so the probable maximal loss of anything is as low as possible, segmenting so that in general, for Bitcoin miners, the risk that has predominated, given good engineering, good risk engineering of the sites, everything else, is natural catastrophe. Putting the cheapest power in the world in the place that also has tornadoes was kind of a mean trick, but it sort of has happened that way. But luckily, tornadoes are a very localized storm. So if you have a large facility that covers a lot of area or multiple facilities, your risk of having multiple facilities damaged in the same incident is much lower than for like a named windstorm. So it's there's a solution there. And there's additionally, the AI market is a little bit more inherently global than the Bitcoin mining market. Bitcoin mining is global just as a side effect of wanting to produce Bitcoin at the cheapest price around the world. AI, there are a lot of national governments that want to have AI in their country for sovereignty reasons, customer data reasons, things like that. And in that case, countries that don't have cheap power or that don't have a favorable natural catastrophe situation also want to have these facilities in their countries. It turns into a complicated situation, but obviously the first movers are the ones that are in the best position where they have inexpensive power. A lot of Middle Eastern countries are doing this, Oman, UAE, Qatar, and they also happen to have large amounts of capital. So there have been some very large deployments there, but I would say there's multiple challenges in putting this hardware into various locations when it is also geopolitically challenging. Export controls, I think we just approved yesterday or this morning UAE getting a large amount of the latest NVIDIA chips, but this has been an issue. No one has ever cared that a bunch of Bitcoin miners get sold through Singapore, but when a bunch of NVIDIA GPUs get sold through Singapore and the final destination is unknown, that becomes an issue that the White House talks about and questions. So there's a lot of concerns that are sort of unique to the AI industry, and as Bitcoin miners move into that space, it's not as simple as just adding more Bitcoin mining hardware. It is a fundamentally different kind of operation. So what a lot of companies are doing is just doing co-location deals where their power on site is sold to a specialist company operating there. But then obviously you're losing a lot of potential control of your own destiny if the AI operation ends up being the majority of your operation. So there's some trade-offs, and I think, as we saw with Bitcoin mining, going from people in wooden sheds with fans and everything else 15 years ago to, or a little bit, yeah, about 15 years ago, to these incredibly, the best-in-class load systems, we're going to see AI facilities much more legible to existing miners and other large power producers, just as a necessity because of the amount of power needed there. So cool. Yeah, we're very active in the insurance space, in the Bitcoin mining space. We do, again, a lot of custody insurance for custodians, as well as insurance for Bitcoin miners for hardware loss, things like that. And as those companies all move into the AI space, or dedicated AI companies moving into the AI space, we are insuring anything we can in the AI infrastructure space. Trying to bring this to I mean, we don't really know where the world's going to go in the next 5 years, but hopefully it'll be a good outcome. So great, thank you.